Hey, what's up, my friends? So in today's training, you will discover the 4 golden rules that you can't ignore when it comes to swing trading. Because here's the thing, right? Have you ever, put on a trade, right? And the market somehow always reaches for your stop loss first, right? Before it reverses back in your favor. Or how about this, right? Every time you enter a trade, right? You set your target profit, but somehow the market never seems to be able to reach your target profit. Or even if it does, right? It ends up reaching your stop loss first before reaching your target profit, right? If that sounds familiar to you, then today's training is for you because I'm going to share with you the 4 golden rules that you can't ignore when it comes to swing trading. So let's get started. Rule number 1 is this: trade from an area of value. You might be thinking, Rainer, what's an area of value? So an area of value is simply an area on your chart, right, where buying or selling pressure could step in, right, and push the price further in your direction. So for example, an area of value, let's say in an uptrend, could be at this previous resistance, which could become support. This is an area of value because this is an area of resistance which could become support. So now, why do you want to be trading from an area of value? So 2 reasons. Number 1, you're entering at a location on the chart, right, where buying pressure could possibly come in and help you push the price higher because this is an area of support, and as you know, right, an area of support is where buying pressure could possibly come in and push the price higher. That's the first reason. Second reason is this: is that when you're trading from an area of value, you can set your stop loss, right? That gives you kind of like a natural protection, right, from the market. So for example, if you see over here, this is an area of support where this blue-purple box that I've drawn, this is where previous resistance could become support. This is like a natural barrier in the market because if you were to set your stop loss, let's say a distance below it, somewhere here, you can see that the market would have to break below this area of support before it reaches for your stop loss. So the market has to work hard to reach your stop loss. And this is what we want, right? We don't want the market to easily hit our stop loss. We want to make the market work damn hard before it reaches our stop loss. That's what we want. So in this case, when you trade from an area of value, it gives you a natural barrier, a protection, right, to prevent the market from, hitting your stop loss prematurely. Make sense? Okay, so moving on. Number 2, have a reasonable target. So here's the thing, right? Have you ever, put on a trade and let's say, you risk $10, right? But your target is, let's say, $100 away. What's going to happen is most likely you will end up getting your stop loss triggered before the market could reach your target. At the same time, right, you don't want to have a stop loss of $10 and have a target profit of like 50 cents because, one loss, right, will wipe out all the little gains that you have accumulated. So this is why as a swing trader, you want to have a reasonable target. But how do you define what's a reasonable target? So a simple guideline I have for you is this: set your your target profit, right, just before the nearest swing high or low. So for example, let's say you are buying in an uptrend. Market is in an uptrend. Okay, let's say you buy the pullback, you buy the dip, you buy over here, and let's say the market does reverse back in your favor up here. At this point, right, where do you take profit? Where is a reasonable target? If you ask me, a reasonable target could be just before this recent swing high over here. Why? Because this is a level where potential selling pressure could come in. This is a swing high. Some traders might think, oh, okay, man, this is a level, let me short, right? The market will have difficulty breaking above the highs. Let me go short this market. So there might be selling pressure lurking around down there. So as a trader who is looking to capture that one swing in the market, you want to have pretty much a good odds, right, of exiting with a profit. Then you want to exit your trade just before this recent swing high because this will give you a good chance, right, of exiting your trade with a profit, right? Because you are now exiting your trade, right, just before the selling pressure comes in. Just before the selling pressure comes in over here, let's say around here, right, and push the price down lower. So you exit, right, before the price reverses against you. So this, if you ask me, is a reasonable level, right, to set your target profit just before the nearest swing high for long trades or just before the nearest swing low for short trades. Moving on, number 3 is this, right? Know the market behavior. So for example, the US stock market, okay? Strong stocks, right, they are likely to continue higher in the US stock market, for example, right? Why is this true? Because, strong performing stocks, right, they are trending up higher for one of 3 reasons. Number 1, strong earnings, right? Consistent earnings. So this is why the stock is in an uptrend. Number 2, strong sentiments. Maybe stock like Tesla, right? They may not be making a lot of money yet, but the sentiments behind the stock is very strong. That's possible as well. Or number 3, the stock is backed by strong fundamental stocks like, Coca-Cola, McDonald's, right? Very well-run company. This is why, such strong stocks, right? They are likely to continue higher. One of these 3 reasons, or maybe a multiple of these 3 reasons. Who knows? Who cares, right? But whatever the case is, right? If you see strong performing stocks, right? They are likely to continue higher. So this is why stocks that break out of all-time high, stocks that break out of 52-week high, they are much higher to continue higher compared to stocks that, let's say, break hit the 52-week low. Those stocks, right, are pretty much stocks that you want to avoid. So it's very important to know, right, the behavior of the markets that you're trading. For example, if you trade Bitcoin, what pattern does it exhibit? If you ask me, right, Bitcoin kind of exhibit this pattern over here, right, on a daily time frame. It gets sleepy over here, low volatility environment, then boom, right. After the boom, it's followed by a bust, right, collapse down lower. Then it goes sleepy again, boom, right, then it busts. And then gets quiet again, low volatility. So this is kind of like the behavior of Bitcoin. What about the Forex market? So Forex markets, they have their own behavior as well. Currency pairs of, let's say, Aussie Canadian, it has a mean reverting behavior. Aussie Canadian, whenever it retests the previous week high, it has a tendency of reversing lower from there. Currency pairs like the dollar against the Chinese yuan, it has a tendency to continue trending, right, after a strong momentum. So again, know the market behavior, because this is like, like going after a girl, right? If you know the likes and dislikes of the girl that you are going after, you have a better chance of, of getting with her, to go steady with her, right? So same thing down here. Know your market behavior if you want to, increase the odds of your trade working out. And then this brings me to point number 4, is this. Look for confluence. What is confluence? Confluence is simply means, right, multiple factors coming together to sweeten the trade. So let me give you an example of how confluence works, right? So for swing trading, right, let's say the stock markets, this is a thing I look for. For the Forex market. So number 1 you can look for is trend, right? Whether the trend is heading up higher or lower. So let's say the market is in a downtrend. Then you can look for an area of value. Area of value could be something like resistance. Market behavior, right? This could be things like what is the statistical behavior of this market. For example, Aussie Canadian, right? Statistically speaking, right, it has a tendency to reverse at the previous week high or the previous week low. Not always, right? But a good chance, right, that it does that. And entry trigger could be simply like a price pattern to get you into a trade, to tell you that, hey, it's time to enter the trade. So let me give you one chart example to show you what I mean. So for example, over here, you can look at this chart over here. This is Aussie Canadian. What is the trend? The trend is heading down lower. Okay, so one thing is the trend heading down lower. Number 2, is it trading from an area of value? You can see over here the price is at this previous resistance, which could become, previous support, which could become resistance. Number 3, what's the market behavior? Let's call it MB over here. So market behavior. So Aussie Canadian, as I've mentioned earlier, it has a tendency to reverse at the previous week high or low. And if you see this orange line, which I've highlighted over here, this is actually the previous week high. So there's confluence coming in, right? This previous week high is at the confluence of this area of resistance. So again, we have this market behavior in our favor. And number 4, what about entry trigger? We have this, what we call this black arrow, which I shared over here, is a bearish engulfing pattern. So you can see that this particular trading setup, right, has many things working in your favor. Number 1, you're trading in the direction of the trend. Number 2 is from an area of value. Number 3, right, you're aligned with the market behavior of this currency pair. And number 4, there's a bearish engulfing pattern, right, to kind of like signal, hey, it's time to go short right now because there is selling pressure, right, at this area, right? That's why the market actually reversed down lower on this candle. Okay, so I'm not going to show you the outcome of this trade because I think the thought process, right, the concepts which I'm sharing with you over here is what matters. And by the way, if you want to learn more about market behavior in the Forex markets, you want to learn more about price action, support resistance, candlestick patterns, you can get this copy of this book called Price Action Trading Secrets. We cover all this and more in this 140-page full color trading book. I'll put the link somewhere below this video so you can get your copy, right? Just pay shipping, printing and shipping, and that's it. And with that said, right, I hope you got value out of this today's trading. Wish you good luck, good trading. I will talk to you soon. And once again, the link is below this video to claim your copy of the book. Talk to you soon.